Hello and welcome to part 2 of the lecture for chapter 14. In this portion I'm going to talk about test of controls, substantive procedures in some detail, and then some of the other, how we handle some of the other current liability accounts. So first of all, test of controls, again, this is with respect to making sure that internal controls have actually been implemented according to their design. So we're going to verify a sample of postings to the control account, make sure that they've gone through the proper channels, meaning the proper modules within their accounting system to get to the control account. I would use data analytics to try to find entries to the accounts payable control account that don't flow through, say the purchases journal or the cash disbursements journal, and those would be the equivalent of selecting those items in the accounting software package. I would vouch some supporting documents to physical documents. I would make sure that the voucher system is being complied with, meaning that for each invoice that you find in an accounts payable trial balance, age trial balance, that you can find a set of documents that that show that there was a purchase order, there was a receiving report, there was an invoice, that invoice is properly authorized for payment. All of the documents agree with each other. Once it's been paid, it's been defaced and refiled. So making sure all those steps are being complied with, making sure that the approvals are done appropriately before they've been entered. So we're going to be looking at compliance primarily here. We're going to test application controls. So we talked about that, I believe it was in chapter 8, where we talked about I think it was chapter 8, yeah, where we talked about batch processing and exception reports the systems can produce. So we want to make sure that they're following the correct steps in terms of batch processing, confirming that their batch totals equal the actual totals from the system. If there are exception reports printed from the system, that those are being followed up on properly. And based on all of that, we will, if necessary, we'll revise the substantive procedures that I'm going to talk about next. So the first thing we would do in terms of substantive procedures is ask the client for a detailed age trial balance of accounts payable as of the balance sheet date, meaning a listing of all invoices from all vendors as of December 31st or whatever the year end is, and we would reconcile that total with the general ledger. We would make sure that we'd verify the footing and the accuracy of the math in the trial balance, especially if it's done by the client in Excel versus output from their computer system, just to make sure that it's correct. We will vouch balances to selected creditors and inspect supporting documents. We'll reconcile the liabilities with monthly statements from the creditors. So either we'll review what the client has done. Hopefully that's one of their internal controls, is somebody that is not involved in processing accounts payable is receiving the monthly statements from vendors and comparing those to the age trial balance for that particular vendor, making sure they're in agreement and there aren't any duplicate invoices that have been recorded or missing invoices that have been recorded. So we'll either look at the client's work that's been done, or if the client hasn't been doing that, we'll select some vendors, request monthly statements, and do the reconciliation ourselves on a sample of vendors. Confirmation of accounts payable is not done very often. It's kind of the counterpart to doing a confirmation of accounts receivable, except here we would send a letter on the client's letterhead signed by the client's controller to different vendors saying, please respond with a list of what this client owed you as of year end. And then we would get that separately to our office and do the confirmation. I say it isn't done very often, but if we are in a situation where maybe the tests of controls reveal a lack of internal control or adherence with designed internal controls, then this might be a step that we would take to get comfortable with the figure. Next, we'd perform some analytical procedures on accounts payable. We might look at overall purchases relative to accounts payable, depending upon the company. we might look at the balance of accounts payable relative to current liabilities, see what that ratio is, compare that over time. What was it last year, the year before? Maybe what did the budget indicate that it should be? See if there are any deviations that are significant. I would look at the aging of accounts payable as of year end for the past several years and look at the total balance, see how it has grown, see how the health of the payables have changed, meaning how much is past due. Has that changed over different period, over the past several years? Point number 6 there is really key. I'm going to have 2 slides coming up on that about how we look for unrecorded liabilities. So I'll come back to that. We'll perform procedures to identify accounts payable to related parties. So looking through the detailed aging, we'll ask the client to identify related parties. We'll look through it to see if any others appear to be related parties as well. We'll look at those transactions just from the standpoint that they are not necessarily at an arm's length, and we may need to suggest revaluation of some of those. It's also necessary to look at how much is owed to related parties for the next item, proper balance sheet presentation and disclosure. So a couple of things there. One, we want to separate out the amount owed to related parties, so that's very clear in the financial statements. We also want to look through accounts payable and see if there are any debit balances that need to be recategorized. Oftentimes, if a supplier request a prepayment, maybe for them to get materials or something like that, a lot of companies will credit cash and debit accounts payable so that when they enter the invoice from the supplier later, it's paired up against that debit, so just the net amount is due. That's a very common way to account for advance payments to suppliers. But in reality, those advance payments are assets. And they are receivables, so they should be recategorized out of accounts payable and into other receivables on the balance sheet, either and most likely in the current asset portion. They don't need to be removed necessarily from the age trial balance, but they should be recategorized from a journal entry standpoint. So some sources of unrecorded payables, and again, I mentioned in the previous lecture that this is what we're most concerned about, is companies understating their liabilities, which makes them appear healthier and oftentimes more profitable. So and it's tricky because it can be hard to find something that hasn't been entered. So one of the things we can do is look for orphaned vouchers. So in their voucher pending file, there could be receiving reports and purchase orders that reflect that something has been ordered and it's been received, but it hasn't been matched against an invoice from a supplier and put into accounts payable. So I might look in that pending folder for receiving reports that haven't been matched up with an invoice. That could be a liability for sure. I might look for invoices that haven't been entered because they haven't been matched up with a purchase order or a receiving report. If that's occurred, that would also be a liability that wouldn't be in the system. I would look at vouchers that are entered in the voucher register subsequent, so after the balance sheet date. So look at some entries that were made, say on a calendar year end in early January, to see if those are transactions that indeed should have been entered in the previous year. Along with invoices received after the balance sheet date, oftentimes an invoice from a vendor might come in the mail in early January. Well, if that relates to product that was purchased FOB shipping point in December and it was shipped in December, but the invoice didn't come until January, again, it should be recorded as inventory and it should be recorded as accounts payable at year end. So those would be some ways that we could find some things that haven't been entered in the system. A little bit more obscure would be consignment issues. So if we're the consignee, meaning a supplier has given us some inventory to sell, what triggers a liability is when we sell it, we owe the cost of that item back to the original supplier, the consignor. So are there some sales transactions where we maybe have neglected to record that payable? And then this is also important. So any prepayments that were entered as credits in accounts receivable, so money that we got in advance from our customers, oftentimes that's entered as a credit in accounts receivable so that it gets matched up against the debit when we invoice the client and show that they owe the net amount. Well, those really, if you remember back to Accounting 201, that's unearned revenue, and that should be recorded as a liability, not necessarily in accounts payable, but it should be recorded as a current liability. So some further things about looking for unrecorded payables. All of the audit staff, regardless of what activities they're doing, should always be on the lookout for potential unrecorded liabilities. That's everybody there. We'll examine transactions recorded following year end, so early January entries. I would be looking for things that maybe were, well, I'll look at the next thing, comparing cash payments after year end to the accounts payable trial balance. So did they pay something in January directly that really should have gone through accounts payable in the previous month or two? Again, that would be an indication that maybe liabilities were understated at year end. And then lastly, we'll look for large dollar items and cash disbursements to see if any of them should have gone through payables as well. Here's an example of a audit work paper showing different items that the auditor found that should have been recorded as payables as of year end, and an adjusting entry for the client to make in that regard. I want to call your attention to let's see, fifth item down, Grant and Company. Shipment received 12/31 per the receiving report, invoice not yet received. So the shipment of goods was received, it was counted in inventory, but the invoice had not yet shown up at December 31st from the supplier. It's still a liability. It should have been recorded as a liability. So that's an example of something that can happen quite easily. So a little bit about other kinds of liability accounts. I'll go through this fairly quickly. This first one regards payroll related liabilities. So federal income tax withholding payable, FICA payable, state and federal unemployment tax payable, any payables associated with other deductions from employees' paychecks. There may be payables to retirement plans, medical insurance, union dues, charitable contributions. All of those kinds of deductions from employees' paychecks generate liabilities. You might remember that from Accounting 201 as well. So to look for these items, I would first do some analytical procedures where I would compare these balances to the prior year. Again, any accounts like that have a zero balance, that typically have a credit balance, would be cause for suspicion. I would trace the amounts to their payroll system. If they're a large company of their own payroll department, we could look for their reports. A lot of companies use outsourced payroll functions like ADP or Paychex or those kinds of companies. So looking at their reports can be an indication of these kinds of liabilities, or can help vouch the numbers for that. We could do some test computations and then making sure that the deposits have been made according to law. Sales tax related liabilities. Again, just kind of a review from Accounting 201 here. It's the company's responsibility to collect and remit sales taxes to state and local governments. So the entity, the company, is a pass-through entity in this regard. And it remains a liability until they've paid it. So we collect it from a customer. It's a liability on our books. We debit cash, credit the liability, and then when we pay it, we debit the liability. So we could look at that by looking at tax returns. We could see if it's reasonable compared to prior year amounts, compared to sales figures. If sales in a particular region have gone up by 50%, we would expect this liability to go up by 50% as an example. We could test some individual transactions to see if the math has been done correctly and if they're assessing the correct tax rates in their invoicing system. One thing to keep in mind in this regard, it is the company's liability to the state and local government to pay the full amount of the sales tax, whether or not they've collected it from the client. So that's important. Accrued liabilities, those are, I talked about that in the earlier lecture on Monday. Those are obligations that are not triggered by a particular invoice. So accrued wages payable, accrued interest payable, things like that, product warranty, liability, accrued vacation. So I would look at these balances compared to the past year. I would look at what management's process of developing the estimate would be. I'd look at events that happen after year end, and then I would independently develop an estimate to see if it's reasonable. If all of your employees get 2 weeks of vacation, you could take gross wages divided by 52 times 2. That should give you a general amount, and then you could look at how many people have taken their vacation to see what the liability should be. Again, I would look at these balances for all of these accounts compared to past years, and I would be keen to look for deviations from the norm or departures from the trend. Lastly, audit documentation. So it would contain all of the work papers relating to accounts payable. If there are multiple accounts payable, or I would even say multiple current payable accounts, like these accruals and sales tax payable and things like that, I would look for a lead schedule of all of those types of current payables, including accounts payable. I would have trial balances of all of these different types of accounts payable in my system as well. Again, in some companies that may be one trial balance for accounts payable. Not all companies have it broken out. If there were confirmations that were done, I would include that information here, and then I would have a listing, like I showed you the example earlier, of any unrecorded accounts payable and the entry we required or suggested the client to make. Again, whether we require them to make that entry versus just suggest it would depend on where it is relative to materiality. So that's the end of the lecture for Chapter 14. Thank you for your attention, and as always, please call or shoot me an email if you have any questions. Thanks.